Now is Lebenthal Global Advisors President Dominick Tavella and Walser Wealth Management President Rebecca Walser. Also joining the conversation all morning long this morning, the Wall Street Journal's assistant editorial page editor James Freeman and the King's College in Manhattan professor of business and economics, Fox Business contributor Brian Brenberg. Great to see everybody this morning. Thank you so much for being here. Dominick, kicking it off with you. Your expectations for this market as technology continues to roll over. Where are we in this sell-off?
Well, we have a tremendous amount of money now coming back into the economy as a result of this new stimulus bill. And there's inflation expectations again. So that had gotten a little bit muted over the last week or so. We saw the 10-year come back down to the 1.5 range, now over 1.6. That is bad news for technology. That's bad news for the large cap growth space.
Yeah, and we're seeing the yields move up this morning and tech move down. Rebecca, what's your take on this? President Biden signed his administration's $1.9 trillion COVID relief package into law yesterday. $1,400 direct payments could be deposited into bank accounts as early as this weekend. Do you see this flaring up inflation the way we are seeing some market participants viewing this?
Absolutely, Maria. If you look at what happened in January, which is a $600 stimulus check, we got a 2.4% personal spending increase in the month of January. And this time we're getting $1,400, and that's for adults as well that are basically dependent on some kind of caretaker. So it's going to be more people this time at $1,400. And I do expect the inflationary pressure that will come and does come when people see the yields going up like that. They can take some gains and go to safety, and that's exactly what will happen.
Yeah, I mean, I guess we're getting the PPI today. Dominick, what's your expectations for the PPI? Are we seeing inflation on the producer level?
So far, honestly, Maria, it's actually been muted, but I think that has to do with we're not yet at a point where the economy is completely open and people are free to spend. We've talked about this in the past. We've had over $4.5 trillion sitting in bank accounts right now without this new stimulus coming in. So there's a huge amount of capital sitting in bank accounts. People are anxious to spend that money. When they're finally free and able to do so, there's going to be a lot of pressure on the goods side because the production hasn't started yet. So until that happens, until the economy gets rolling, there's going to be a lot of pressure on prices, and they can only go higher.
All right. Well, we're going to be watching that. Obviously, we'll get the PPI out in about 2.5 hours. James Freeman, jump in here.
Yeah, I'm just kind of wondering where it goes beyond the short term, the immediate term. You mentioned 1.6% on the 10-year is still historically pretty low. Government's taken on nearly $4.5 trillion of debt in the last year. Federal Reserve created about $3.5 trillion of money. How bad do you see inflation, and what does that mean for interest rates going forward?
So we've seen a spike already, right? We were a year ago, we were at 0.6 on the 10-year Treasury. But I do believe inflation is going to be specific to product or production. So we talked about prices of lumber and prices of steel. Production is not up to speed yet. So we're going to see this initial spike. It's going to look scary. I think we see, not today, but I think as we go into the year, we're going to see inflation well over 2%. But I think once production starts to get back into full focus, look at car production right now because we don't have chips. So once the chips come in and the production of those cars can start going again, eventually things will level off. So short term, we would get a little spike. Later on in the year, I think that levels out and some of the fear comes out of it. But as we go into next year, you could see really large increases in inflation and substantially higher interest rates.
Yeah, I mean, you also have this idea that all adults will be eligible for the vaccine come May 1st, Rebecca. That was a big statement from President Biden last night. Your take on that as it leads to a further opening of this economy and a normalization that we're all hoping for?
It's actually kind of surprising, Maria. I mean, that's 6 weeks away, and you're talking about every adult in America in 6 weeks is going to have the opportunity to get the vaccine. I mean, the logistics of that, I hope that's already there because that would be almost impossible to get done in 6 weeks. But Obviously, the more confidence, I don't think it's about a vaccine or anything, because the survival rate on this thing was so high anyways. It's about the consumer having the confidence to get back out and spend and travel, and hopefully businesses to have conferences again, and let's open concerts and all of those things that we're just not doing, and we're 70% consumer-driven economy. We must get back out and get back to some level of normal. Whatever that is, Maria, I don't know, but it's not this. With government stimulus constantly for the last 12 months, that is not a cycle that can be perpetuated indefinitely.
So do you want to buy stocks here, Rebecca?
I want to buy semiconductor stocks, Maria. The Internet of Things, we're already got a shortage.
You got to be real selective. I got you. Dominick, real quick, how about you? You want to buy stocks, or are you pulling back here?
You want to be very careful, again, where you buy. We just added in the emerging market sector a pullback of 10%, made it a buying opportunity for us.
All right, we'll leave it there. Dominick Tavella, Rebecca Walsher, great to see you both. Have a great weekend. Thank you so much.